Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. This week I'm in Nashville for the National Cattlemen's Beef Association Cattle Inventory Convention. So we're going to talk a lot about cattle. We're going to talk to University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, so last week we talked, cattle on feed report came out, and we really saw a lot of that carry over into the trade on Monday. What was going on and what was the trade doing?
Yeah, so I think when you look at Monday, we certainly saw cattle prices, feeder cattle prices lower out of the gate this week. And I think the placement data that we saw for December made a lot of folks worried in terms of being up well outside the range of what we anticipated. So it was the beginning of some information that came out relative to more numbers than we anticipated. And I'll continue to remind us, so perhaps some of those calves came from wheat pasture, but my polling of producers in Missouri still tells me there's a lot of calves being held as producers were hoping for higher calf prices. They've seen them and they continue to hold, hoping prices go even higher. I worry about the runs that we have coming as we look over the next few weeks, and folks sure need to plan for that potential of larger runs.
So we talk about what happened on Monday. That goes into the cattle inventory report on Tuesday. Were we surprised to see that report, especially since we've not seen any of those numbers for a year?
Well, we sure got more cows and cattle and heifers greater than 500 pounds being held in the herd. You know, you look across the board and we got outside the range in all of those categories. So it's almost that dreaded triple witching hour that we got here all at the same time of bad cattle on feed or large cattle on feed numbers, or placement numbers at least, and then followed up with large cattle inventory. You know, beef cows being up 3.5% relative to a year ago, nearly 1 million head. When pre-report said we'd be up 1.1%, it just tells you how much we exceeded those pre-report estimates. And you've got to go back a long ways to find 2 years in a row where we were up nearly 1 million head back to back in beef cows. So folks have figured out how to get beef cow inventories built back very quickly, and it's a much stronger ramp than any of us would have ever thought. I just add, when you look at beef heifers greater than 500 pounds, sitting there at up 1.2%, when pre-report would have said, folks would have said down 1.2. It tells me we're not done building yet, so we'll wait and see how 2017 unfolds.
You're not the only one who doesn't think we're finished building the cattle herd. I mentioned I was at the Cattlemen's Beef Association Cattle Industry Convention, and the Cattle Facts Outlook came out on Thursday, and they talked expansion as well, 400,000 roughly. Are we surprised? Can the beef industry take on that many more head of cattle?
So I worry about the supplies that we ultimately get from the expansion that's going on right now. Now, I would like to remind us that, you know, much of the cow inventory count that we're talking about may not have that much effect in 2017, and it might be 2018 before we see the additional calves starting to come to the market. But that's a much larger expansion than anybody would have ever suggested, and I think it's hard to turn the spigot off once it's started. That back-to-back nearly 1 million head increases tells me that 2018 we may look at yet another expansion year, and it just puts more pressure on prices. And it reminds us that we have to continue to find greater demand for U.S. beef, whether it's in this country or other countries, because we're going to supply more beef to the marketplace in the next 12 to 24 months.
And we'll talk a little bit more about exports coming up in a little bit, but let's talk first about risk management. So we talk about continued expansion, and we've talked a lot about the input side of risk management. Are there other ways for producers to maximize their return on investment for their cattle herds?
Well, so I always go, while we're expanding beef cow numbers, we can certainly talk about the quality of genetics used in rebuilding that beef cow herd. And I think it goes along a number of lines, and I talk about sometimes quality. If I'm sitting there today producing calves that ultimately end up grading select or low choice, and I can make an investment in genetics that all of a sudden my calves are upper choice or prime, that's probably a good strategy. And I say that because when I look at demand for prime beef or demand for upper choice cuts of beef, that demand's been fairly strong and has stayed fairly strong. On the flip side, when I look at the select beef side, it's the one that's been more troubling in terms of the demand falling. So if you want to talk about moving from producing select calves that grade select to calves that grade upper choice and prime, you have some opportunity. And I'll say, don't, never want a single sort or single trait work on genetics. You also want calves that grow efficiently in the feed yard and everything else. But genetic improvement is one way I think you can talk about some risk management.
Talked a lot about beef. Scott, let's talk a little bit about the pork market. We're seeing stories about a bacon shortage. Is that really what's going on, or is there something else that's driving prices a little bit higher?
Well, we sure see a lot about where's the bacon these days when we look at what's been happening in pork bellies. And so, number one, I don't think we're going to run out of bacon. I think that, yes, we're at very low levels when you look at pork bellies in cold storage that we got last week, the lowest ever that we saw for the month of December. Pork belly prices have responded. We're up almost 37% in pork belly values relative to a year ago. It's been helpful to the pork cutout value that this week's up over 8% relative to a year ago. But I think there's going to be enough bacon to make sure everybody is able to secure supplies of bacon that they need. Now, one of the problems that we face is we don't want to run bacon prices so high that we find food service deciding to substitute away from bacon. And I don't know that there's great alternatives, but once they make that decision to substitute away from very high prices, it usually takes them a long time to return. So we don't want to run so high here on the bacon front right now in the short term that we hurt ourselves longer term. So that's probably for me the only big issue that unfolds as I look at where we're at in terms of bacon prices today.
And we're still seeing big supplies of pork in general. We're also seeing large supplies in the poultry production numbers. When we look at those, how is poultry measuring up as we saw like big production numbers for pork as well?
Yeah, so I think across the board, we've started out of the gate pretty high in terms of chicken production growth relative to a year ago. When we look at the week ending January 27th, chicken production that week ranked 13th since the beginning of 2005. So we're sitting there putting a lot of chicken on the market as well as beef and pork. And so supply growth will be one of the issues that we talk about in all of 2017. It looks like we'll be up over 3% in terms of total meat supplies again in 2017. And what do we do with that additional 3% is the very important question in terms of ultimately what happens to prices.
My other question then would be, where's that all going? How do we have to find markets, not just domestically, but around the globe as well?
I think it is critical as we look in 2017 that we do find markets outside the United States as well to move product, given just the sheer increase that we've seen over the last couple of years. Now, I like to back up for a minute and remind ourselves that you go back to 2014 and 2015, and we were very tight in terms of meat supplies. So the level of supplies and the level of domestic availability, probably only takes us back to where we were in, let's say, 2010, 2009, somewhere in there. So this is not some astronomical new level, but the very tight supplies that we saw in 2014, 2015, we're just recovering from there, and we're back to where we were before we saw the drought affect much of the cattle side of the industry and disease events affect the pork side of the industry. So we're growing per capita supplies, but internationally it's also important to get some growth, and we'll have to wait and see how the strength of the dollar and other trade issues play out as we move through the year.
Trade issues like pulling out of the Trans-Pacific Partnership?
So TPP is certainly one of those. I always like to remind folks that, so number one, when you think about TPP from an ag perspective, it seems to me that, especially for cattle, very positive when you understand that the tariff that our product might face going into a country like Japan, one of our major customers, would eventually move to levels similar to what the Australian beef industry sees going into Japan. So, but that's a longer term issue in terms of TPP. Renegotiating TPP in 2017, it probably won't have made a lot of difference to the strength we see in the short term. That TPP agreement to me is the one that we need in the longer term to make sure we continue to see growth. So I'm less worried in the short term about what we see in ag markets from TPP. Some of the other issues may be a little more troubling.
Short-term concerns maybe as we look at getting back into NAFTA and renegotiating or reopening that trade agreement?
Absolutely. There we can talk about both. Well, we can talk about almost all the commodities, but Mexico tends to be a large market for pork. Mexico tends to be one of our larger markets for beef. If we were to lose the ability to move product south to Mexico here in 2017, that could be one of the things that keep prices lower than maybe we'd like to talk about as we move through 2017. And I like to remind, so this is, I like to say I'm not critical of President Trump when I say that. He's very much made the pitch that it's about jobs. But I think in agriculture, we have to remind ourselves that renegotiation of agreements like NAFTA, it's probably harder for it to be a better positive than what we've seen of late in those markets. It doesn't mean it's not good for us as a whole in the country, but ag's potentially one of the areas that this could be tough for in 2017.
One other interesting note this week, Scott, jobs, we saw a big pop in those numbers. What does that mean, and how is that good for the livestock sectors and the ag sectors as well?
Yeah, so we got 227,000 jobs out of the jobs report that was released today, up substantially over what pre-report estimates would have suggested there. And I think that's kept stock markets a little higher today than we might have been otherwise. But for me, more jobs, more money in pockets, want to eat more beef, pork, chicken. It's all very directly related. I go, thank goodness we're seeing some stronger economic signals in the overall economy in this country, given that we are growing per capita meat supplies again in 2017. That balance, that critical balance between what's going to be a lot of additional meat coming to the market in 2017 relative to stronger domestic demand and stronger international demand is going to play a very large role in where we end up, whether we call 2017 a good year for livestock producers or a bad year for livestock producers.
Scott, as we look ahead to next week, any big reports that we're paying attention to and need to keep our eyes out for?
Yeah, so next week we're going to get monthly trade data, and again, I think it's critical to see if we can build on some of the momentum that we've seen of late. Last few months, we've talked about pretty positive signs on the trade front. We'll also see USDA give us yet another look at where they see 2017 meat supplies, as well as where we're at in the current crop year, and maybe a little better indication of what we're going to see out of South America in terms of crops that are being harvested there. So both input and output prices, we're going to get a chance to see what USDA is saying about those next week as well.
Scott, anything else?
I think we've covered it. We're going to continue to see this tug of war between larger supplies and hopefully stronger demand, and we'll see how it unfolds as we go through the year.
Thanks, Scott. We will see you next Friday.
Very good, Megan.
Questions or comments for Scott or myself, you can go to brownfieldagnews.com and submit them there. You can also subscribe to have our weekly livestock market updates delivered directly to your email box every Saturday morning. Have a great weekend. I'm Megan Grebner on Brownfield.